we want to see that job creation of around 250,000 has stuck, and that there's ongoing job creation. We're watching the construction sector. There was positive momentum there. Hope to see that continue. Signs maybe that government is building out, the infrastructure rollout is gaining traction. We'd like to see this stemming of the losses in the manufacturing sector. As the rand strengthens, it makes it cheaper to import. So we don't want to see that sector coming under too much pressure. And then we'd like to see that momentum in the hospitality and retail, on the back of good tourism, add some further jobs. So around 31.7, 31.8 would be a nice little positive surprise.
Right, for more on the unemployment numbers due tomorrow and in inflation data that will be released on Wednesday, I'm joined in studio to expand the conversation with SABC News Economics editor Tshepo Mongoai. A very good afternoon to you, Tshepo. Thank you so much for joining us.
It's a pleasure.
When StatsSA released its quarterly labour force survey in 2025, South Africans were once again confronted with news that the nation's already dire unemployment rate had escalated. What can we expect this time around?
Well, I think most economists surveyed, they expect more or less the same numbers, around 32% in terms of the country's unemployment rate. But I think what's key is the movement and the shift in terms of what is the trend that is emerging from these high unemployment numbers that we are sitting on as a country. Are they so-called green shoots, as they say, in certain specific area? But I think we might find that it's a tale of two, given that it's towards the end of the year. There are certain sectors that naturally you would expect that they will do well, like your tourism and hospitality. Mm-hmm. But we know that around that time, obviously, there are a lot of factories and manufacturers that close temporarily for festive seasons. Yep. So you might see that there are certain sectors that perhaps because there hasn't been much much activity, you're not getting much from those particular sector. But the export driven sectors, mm-hmm. Like your mining, we've seen the rally in the gold price. So you do expect that those sectors would have done exceptionally well, benefiting from a very high commodity prices. So that could actually be an impetus that we will get. But the structural issues remain at play largely. Although I think economists will look out for some signs, if indeed the areas where there's been some improvement, are those improvements translating into economic activity, and by how big, and the quantum of that would be quite significant to watch. But obviously there will be issues around youth unemployment that is still a bugbear, that is major concerns. There are a lot of intentions and plans in the pipeline from government to deal with that. I don't think for now there will be a significant shift in addressing that. We still have quite a high number of youth that do not have quite skills that are needed in this current age, and that might actually result in many young people still outside the labor market, mm-hmm. discouraged job seekers, and youth who are neither in education or employment.
Yeah. In fact, as you speak and ventilate those issues, speaking about intentions from government and the areas of improvement, which are areas that we continue to watch as more and more people continually enter the job market, the numbers have been showing that government and businesses need to do more to bridge that gap. They need to start thinking out of the box to ensure that there are enough jobs for the people who enter the market.
Yeah, in fact, there are jobs that are available. Yeah. There are a lot of vacancies in the economy, but the problem is there aren't enough people or skills to take up those jobs. So that is one of the major issues. And there aren't many who actually can be trained for that, because they don't have the most minimum to be considered for those jobs. So there is a disjuncture, mm-hmm. Disconnect between what the education system is producing and what the economy needs. And with artificial intelligence, of course, you are actually seeing that gap widening. So more and more young people need to be trained in those specific skills in order to be active
if
in
we
the
see
economy.
the well-documented shortages in sectors like nursing and teaching, which brings us to your point. Now, we also know that on Wednesday, StatsSA is going to release the country's January 2026 inflation data. And one of the product categories that many will be looking out for as we look at the growing concerns about the impact of the foot and mouth disease and the issues around vaccines and quarantining and so forth. That in itself is going to be a big focal point, isn't it?
Absolutely. I think going forward, that is a major concern. But currently, I don't know if there's anyone who would complain about some of the benefits of low inflation that we are seeing currently.
Yeah.
If you are using a car, you can tell the difference that if you put 200 Rand in your vehicle, you put 500 Rand, it actually takes you an extra mileage. And you can feel it when the trips that you would have to pay more, but now it costs much less and you've got a bit of a change. So that's the current benefits. We've seen that even in the beginning of the year, in January, there was a massive cut in fuel price, and that has actually helped in keeping inflation at the current levels of around 3.6%. But there's a warning, as you correctly pointed out, that there are risks to the inflation outlook, and they can come through different ways, and one is the impact of the foot and mouth disease, and that could actually create challenges for the agricultural sector in terms of how they operate, and as a result we might see higher prices of beef. Of course, red meat has actually been a major challenge in terms of
Absolutely.
the food prices. It still continues to increase a double-digit increase, around 12%, and that is not even slowing down. Well, there are signs that it's slowing down, but it's still a double-digit increase. So that's where some of the risk could come from. The guys who produce pork, the farmers who produce pork, have also been raising some concerns with the African swine and the foot and mouth disease, that they are concerned that they are starting to see cases in that particular area, and that could also push up prices. And of course, the usual suspects, the rand exchange rate, although currently it's in our favor, and it can change at any time, and that could actually create energy as well, electricity, and those administered prices tend to also push up inflation.
So it's a mixed bag. Thank you very much. We will be watching the StatsSA release its first quarterly labour force survey, as also looking to StatsSA releasing the country's January 2026 inflation data come Wednesday. SABC News economics editor Tshepo Mongoai giving us a sense of some of the expectations, the highs and the lows, as we look to assess those figures.